Good morning. Welcome to this webinar where we'll be speaking about policies for professionals within the construction arena. My name is Daniela McGowan and I'm a Principal Associate in our insurance sector, and I primarily act in the defence of claims brought against construction professionals. I'll be speaking today with my colleague Sophia, Hanif, an associate also within the insurance team. Today we will not be having a Q&A session due to time constraints, but we would still like to hear from you with any questions, so please post them on the chat with your contact details if you would like us to respond by email at the conclusion of this session or shortly afterwards. So we appreciate there are lots of policies available on the market for construction professionals. However, today we will be concentrating on the professional indemnity policies relevant to architects, surveyors, engineers, and design and build policies for contractors. Given the wide reach of these different professions, we will provide an overview at this stage. We're going to cover the scope of services a professional indemnity policy generally provides, when cover is triggered, what is covered under the policy, and some common exclusions. So I'll start by looking at the insuring clause, which sets out what a policy provides. The example on the screen says that this policy covers the professional services of the insured's business as stated in the schedule. This seems simple enough, but in fact, this phrase is often the cause of much confusion and dispute. The precise nature of the insured's operation and business can only be fully understood and clarified by referring back to the proposal form. The proposal form, as many of you will know, asks a variety of questions of the insured relating to its business. A key question is asking, what do they actually do? This needs to be thought about carefully and should include all work carried out, even work undertaken by the minority of the company. A breakdown of the turnover is often included, as this can have an impact on the cover available. It's no good having a policy with an overall limit of £5 million if the insured regularly undertakes contract work valued at double that figure. I accept that excess cover may be in place, i.e. a policy which kicks in when the original indemnity limit has been reached. But without it, the insured would be uninsured for any sums above the policy limit and would have to pick up the tab for any uninsured losses. These risks need to be explained to insureds from the outset. On the same note, the insured should be also thinking about ongoing and upcoming projects in the pipeline and declare these on the proposal form. This is because this will reveal both the type of project and its expected or anticipated value, both of which impact the level of indemnity required. Finally, the proposal form can often ask the insured to provide information about its employees, consultants, subbies, qualifications, and experience. Again, this seems like a simple question, but must be given serious consideration if asked. For example, if the insured is a firm of architects, but employs an external engineer who does not carry his own professional indemnity insurance, and the insured carries the contractual liability for that consultant's work, the insured will need to declare this to insurers to secure cover for that risk. As will have been obvious from what I've said, if some of the insured's works or services are not declared, there will be no cover. No cover for a claim, as you can imagine, can have catastrophic consequences, particularly when considering large value projects which are worth thousands, if not millions of pounds. The result of uninsured losses can be a financial disaster and can cripple a company, a situation to be avoided wherever possible. If the matrix of the insured organisation includes multidisciplined professionals, you may want to look at insurance policies which are available in such circumstances. The earlier example I gave was an architect and engineer, where people employed within and by the insured are qualified in different areas. This type of arrangement is becoming more common, where companies are looking to try and offer full client services without the need for subcontractors being involved. So picking up on the subcontractors position, subcontractors are engaged for a variety of reasons. Most contractors are only able to operate effectively with the assistance of subbies services. So for example, if the main contractor is building a housing estate, it may appoint surveyors, architects, civil engineers, and is likely to have a subcontract in place with each of them. The contractor needs to make sure that they are checking that the correct levels of insurance covering the right entities are in place before the works begin, and ensure sufficient levels of cover for the size of the contracts and the works being carried out. The main contractor should also check his own liability for the subcontractors under the main contract it has with the employer, and ensure it is not accepting a greater level of financial or legal liability for the subcontractor or generally. I'm now going to pass on to my colleague Sophia, who will be discussing what is covered in relation to claims and common exclusions.
Thanks, Daniela, and good morning all. So when obtaining and considering an insurance policy, it is important to know what is in fact covered. A starting point is that cover will usually be available for claims first made, notified during the policy period, in respect of any civil liability arising out of the activities of the assured, subject to any exclusions in the policy, which I'll come on to later. A civil liability covers situations where the insured may be held liable for a loss due to violation of a civil law, negligence, or breach of contract. So let's look at what constitutes a claim that needs to be notified under the policy. An insured should notify insurers of firstly any claim made against them. So this may be receipt of a formal letter of claim or service of proceedings by way of a claim form issued at court served at their address. Secondly, any notice of intention to make a claim against them. An example was a complaint from the insured's client. They said at the end of it, "I intend to seek legal advice and make a claim for my losses." This ought to have been notified to insurers. Thirdly, any circumstance, act, omission, or so forth, which is likely to give rise to a claim against the insured or a claim by the insured under the policy. For example, this may be on a large project with multiple parties where the insured knows an architect has received a complaint from their client, and the insured may have been contracted for the building work. So the discovery of this complaint could lead to future issues for the insured. And finally, the discovery of reasonable cause for suspicion of dishonesty or fraud. Now, looking at claims where there have been negligent errors and or omission, let me explain. So the policy will cover the insured for claims first made during the period of insurance in consequence of any negligent act, mistake, or failure to take a relevant step. For example, a surveyor may fail to include significant details about the condition of a property in a building survey for a purchaser's intention. Or this may be an error by an architect firm in the calculations and building drawings, which then cause errors in the delays in the construction process. The client may take legal action against the insured, seeking compensation for the delay. The error or omission can be committed by the insured or any specialist designers, consultants, or subcontractors of the insured, provided rights of recourse against such contractors have not been waived. Next, looking at a design liability. So a common coverage debate in the construction world, as you may know, is whether the claim falls under design, which is covered under the policy, or falls under workmanship, which is a common exclusion, and I'll come on to that later. On larger projects, a principal contractor may provide the design or contract services of an architect and will not carry out design work themselves. The insured will be covered for any failure to warn the client of any inadequacy or deficiency in any design supplied by their client. So that's what's covered. Now moving on to things which aren't covered, i.e. the exclusions. So let's start with prior claims. An insured ought to notify insurers of any earlier claims prior to the period of insurance in its proposal form, as Daniela referred to earlier on. A claim notified or occurring in a previous year will be dealt with by that insurer under that insurance policy and will be excluded from the current policy. Another exclusion you will see is to do with workmanship, as I touched on earlier on. Policies will often exclude cover for claims, as you can see here on the screen. This exclusion will often be relevant where the insured has subcontracted builders to carry out parts of the project and has been defective workmanship. Another common exclusion relates to contractual liability. So an insured is unlikely to be covered where it has entered into more onerous terms which impose a greater responsibility than the standard of reasonable care and skill at common law. This may include warranties and guarantees in contracts, and most commonly, fitness for purpose terms. This is a term which imposes on the insured an absolute obligation that the product or services will be fit for the intended purpose for which they were purchased. So you can see this can stretch quite far. In light of the potential absence of coverage, many design and build contracts may contain express provisions which absolve the contractor from a fitness for purpose obligation and limit liability for design to the standard required of an architect, if we're talking about architects in this scenario, or other professional designer. Now, an insured can purchase other insurance. In some complex construction projects, the insured can have several different policies in addition to their professional indemnity policy, and those policies may then overlap. The insured may therefore be entitled to indemnity under another policy, so an issue of double insurance may arise. It's well known that an insured can insure themselves against loss, but they may not profit from it. So most policies will therefore include this as an exclusion to cover such scenarios. In the event a claim does trigger two insurance policies and all the criteria are met, the claim could be split equally or as agreed between the insurers under a rateable proportion clause. Insurers can also include an escape clause, where the claim would not be covered if there is cover available to the insured under another policy. More often than not, you'll find that insurers may request that the existence of any double insurance be notified to them in writing. So in conclusion, there are further exclusions as shown on the screen, which are often included in other insurance policies and which you may recognise. As there are quite a few, we are hoping to address this in a future session, but for now, I'll pass back on to Daniela to wrap up this session.
Thank you, Sophia. Well, that's everything that we've covered today, and we'll do our best to respond to any questions by email following this event. Our next cover talk is on Thursday, 19th of May, when my colleagues Neil Howes and Adrian Quinter will be speaking about when solicitors go bad, illustrating the impact of fraud and dishonesty allegations on cover under a lawyer's PI policy. Finally, we invite you to please complete our questionnaire at the conclusion of today, as this does guide us in ensuring we choose those topics you would like to listen to. We hope to see everyone on the 19th of next month, and thank you all for listening today, and we wish you a lovely day.